Projected 30% shift in investment patterns, insights on global economic realignment and competitive dynamics. Overview. As we approach the end of 2025, analysts predict a significant transformation in global investment patterns, particularly within the technology, defense, and agriculture sectors. This anticipated shift is expected to amount to a 30% reallocation of investments driven by various macroeconomic factors, including changing consumer demands, geopolitical tensions, and technological advancements. This report synthesizes expert insights on the implications of this shift, focusing on the economic context, sector-specific dynamics, key drivers of investment, and the timeline of events leading to this realignment. Economic context 2024 to 2025. Throughout 2024, the global economy displayed resilience in the face of challenges such as inflation, geopolitical strife, and evolving policy landscapes. The United States led the charge with a robust GDP growth of 2.8%, while other regions showed more modest gains. The eurozone, for instance, struggled with sluggish growth, recording an increase of only 0.8% due to high inflation and supply chain disruptions, particularly affecting industrial production in key nations like Germany. In the context of these economic fluctuations, the upcoming shifts in investment patterns are poised to reshape competitive dynamics across industries, impacting everything from consumer technology to agricultural practices. Sector-specific insights. 1. Technology sector. The rapid adoption of artificial intelligence (AI) and machine learning (ML) technologies is expected to catalyze a surge in investments within the tech sector. Companies such as Nvidia and Microsoft are at the forefront, with projections indicating that AI could contribute approximately $15.7 trillion to the global economy by 2030. The push for digital transformation across industries will drive this growth, compelling firms to allocate resources toward innovation and technology integration. 2. Defense sector. Increased geopolitical tensions, particularly following conflicts in the Middle East and Eastern Europe, have prompted nations to elevate their defense budgets. This trend is expected to continue, with experts forecasting structural increases in defense spending across many countries. The resulting demand for advanced military technologies will further accelerate investments in this sector, altering the landscape of global defense markets. 3. Agriculture sector. The agricultural industry is undergoing a transformation driven by climate change and rising costs. Innovations such as precision agriculture and climate-resilient crops are gaining traction as farmers seek to enhance productivity and sustainability. The increasing consumer preference for locally sourced and high-quality food is also shaping investment strategies in agriculture, emphasizing the sector's critical role in food security and environmental sustainability. Key drivers of investment shift. Several factors are influencing the projected shift in investment patterns. Regulatory changes. A growing emphasis on sustainability and innovation is shaping investment strategies across sectors. Policies like the EU's Green Deal, which aims to significantly reduce greenhouse gas emissions, are directing capital toward clean energy and sustainable agriculture initiatives. Economic recovery signals, stabilizing inflation rates and improving consumer confidence are expected to bolster investment in sectors such as technology, clean energy, and healthcare. The gradual return of investor confidence will play a crucial role in this economic realignment. Market dynamics. The transition from traditional industries to high-growth sectors reflects broader trends toward innovation and adaptability. The demand for advanced technologies in manufacturing, energy, and agriculture mirrors changing consumer preferences and global economic conditions. Timeline of events. 2024. As the global economy began to stabilize post-pandemic, various regions exhibited differing growth trajectories. The U.S. economy showed strong performance while Europe faced challenges in recovery. Q4 2024, the noticeable uptick in defense spending became apparent, particularly in conflict-impacted regions. Concurrently, investments in technology surged, especially in AI and clean energy sectors. as companies began to pivot in response to new market opportunities. 2025, the anticipated investment pattern shifted by 30% with a pronounced focus on technology defense and sustainable agriculture. This realignment will see companies adapting to evolving consumer demands and regulatory pressures, reinforcing their commitment to innovation and sustainability. Conclusion: the interplay of economic recovery, technological advancement, and geopolitical factors is reshaping investment patterns across key sectors. As we approach the end of 2025, companies aligning with innovation and sustainability are well positioned to thrive in this new economic landscape. Monitoring these trends will be essential for stakeholders aiming to navigate the evolving global economy, as the implications of this investment shift will resonate across industries, influencing competitiveness and growth trajectories for years to come. References: 1. Deloitte Insights on Global Economic Outlook, January 2025. 2. Forbes, Top Sectors to Invest in 2025. 3. DLL Group, Trends, Innovations, and Challenges in Agriculture and Food Systems for 2025. This report serves as a comprehensive overview of the anticipated shifts in global investment patterns, leveraging expert insights to provide a detailed understanding of the driving forces and resulting implications across key sectors. The projected shift in investment patterns across technology, defense, and agriculture sectors anticipates a notable 30% change in strategies by Q4 2025, marking a significant global economic realignment. This transformation is influenced by a confluence of factors, including regulatory changes, technological advancements, and shifting consumer preferences, and is expected to reshape how companies allocate resources across these sectors. Counterintuitive insights. 1. Resilience amidst challenges. Despite the forecasted economic headwinds such as inflation and geopolitical tensions, many economies, particularly the U.S., are projected to experience strong growth. This runs counter to the common belief that economic instability uniformly leads to downturns. For instance, while inflation persists, the U.S. economy is expected to grow at a rate of 2.4% in 2025, suggesting that consumer spending and business investments can thrive even in challenging environments. 2. Defense spending as an economic catalyst. The increase in defense budgets due to geopolitical tensions such as the conflicts in Israel and Ukraine is anticipated to significantly boost investment in the defense sector. This counters traditional economic models where military expenditure is often seen as a drain on resources. Instead, this shift may stimulate technological innovation and job creation, which could have wider positive effects on the economy. 3. Agricultural innovation in response to crisis. The agriculture sector's response to climate change and rising costs through innovation challenges the notion that crises lead to stagnation. Instead, the sector is expected to embrace technological advancements like precision agriculture and climate-resilient crops, portraying a proactive rather than reactive. The report discusses a projected 30% shift in investment patterns across technology, defense, and agriculture sectors by Q4 2025, highlighting significant implications for global economic dynamics. As we delve into the report, several critical points may be overlooked by the general audience, though they hold substantial significance. 1. Geopolitical tensions and defense spending. The report indicates that heightened geopolitical tensions, particularly related to ongoing conflicts in regions like Ukraine and Israel, are driving nations to increase their defense budgets. While many may focus on the immediate impacts of such tensions, the structural increase in defense spending reflects a profound shift in global security paradigms. This shift may lead to a reallocation of resources, impacting public spending in other crucial areas such as education and healthcare. The long-term implications of this trend could mean that economies become increasingly militarized, which could stifle innovation in civilian sectors. 2. Sustainability in agriculture. The agricultural sector is grappling with climate change, rising costs, and evolving consumer preferences towards sustainability. While many readers may recognize the significance of sustainable practices, the report highlights that innovations such as precision agriculture and climate-resilient crops are not merely trends but essential adaptations to ensure food security amid increasing global demand. The shift towards sustainable agriculture signifies a critical junction where economic viability must align with environmental stewardship, potentially redefining agricultural policies and investment strategies globally. 3. Technological innovations and market dynamics. The report emphasizes the rapid advancement of technologies like AI and machine learning, which are set to contribute approximately $15.7 trillion to the global economy by 2030. While the economic potential of these technologies is clear, the report hints at a more profound transformation. The competitive dynamics within industries may shift dramatically as businesses that fail to adapt to these innovations risk obsolescence. The urgency for industries to embrace digital transformation could lead to increased market consolidation, where only firms that successfully harness technological advancements will thrive. 4. Regulatory changes and investment patterns. Regulatory frameworks are evolving to promote sustainability, particularly in sectors such as clean energy and agriculture. The report notes that policies like the EU's Green Deal are driving investments in sustainable practices. However, the implications of these regulatory changes extend beyond immediate compliance. They may redefine competitive advantages in various sectors. Companies that proactively adapt to these regulations could outperform their peers, leading to significant shifts in market shares and investment flows. 5. Consumer behavior and market demand. A notable point that may be overlooked is the changing consumer behavior driven by a desire for locally sourced and high-quality food. The agricultural sector's response to this demand reflects a broader trend toward personalization and quality in consumer choices. As consumers become more discerning, businesses that prioritize transparency and quality in their offerings may gain a competitive edge. This shift in consumer preferences can have ripple effects across supply chains, prompting businesses to re-evaluate their sourcing and production strategies. 6. Economic recovery signals and sectoral growth. The report underscores that as inflation stabilizes and consumer confidence returns, sectors like technology, clean energy, and healthcare technology are expected to attract significant investment. However, the nuances of this recovery are critical. Not all sectors will benefit equally. Understanding the specific drivers of growth in various sectors can help investors identify opportunities that align with emerging economic trends, particularly as global markets continue to recover from the pandemic's impacts. 7. Investment predictions and market dynamics. The anticipated 30% shift in investment patterns signifies a broader reallocation of capital towards innovation and sustainability. This shift may disproportionately affect traditional industries, potentially leading to job displacements in sectors that are not evolving. The report suggests that stakeholders need to monitor these trends closely to navigate the evolving landscape effectively, as the winners and losers in this economic realignment will be defined by their adaptability to change. 8. Long-term implications of investment patterns. A critical oversight may be the long-term implications of these investment shifts. As capital flows toward emerging sectors, traditional industries may face increased pressure to innovate or risk decline. This could lead to broader economic disparities, where regions or countries heavily reliant on outdated industries may struggle to adapt, potentially exacerbating social and economic inequalities. In summary, the report's insights into the projected shifts in investment patterns across key sectors encapsulate a complex interplay of geopolitical, economic, and social dynamics. Understanding these nuances is essential for stakeholders aiming to navigate the evolving global landscape. The implications of increased defense spending, the push for sustainability in agriculture, the transformation driven by technological advancements, and the changing consumer behavior all highlight critical areas that require attention as we approach the projected shifts in investment strategies by Q4 2025. 1. Shifts in investment patterns across key sectors. The projected 30% shift in investment strategies by Q4 2025 highlights a significant realignment in technology, defense, and agriculture sectors. This realignment is driven by rapid advancements in artificial intelligence AI and machine learning ML, increased defense spending due to geopolitical tensions, and innovations in sustainable agriculture practices to combat climate change. These sectors are expected to experience substantial growth as companies adapt to changing consumer demands and regulatory environments. 2. Economic recovery and policy impacts. The global economic context for 2024 to 2025 shows resilience despite challenges like inflation and geopolitical tensions. The U.S. economy, for instance, is projected to maintain robust growth driven by consumer spending, while Europe faces sluggish growth but shows signs of recovery. Regulatory changes, particularly in clean energy and sustainability, will play a crucial role in shaping investment strategies, influencing investor confidence and sector performance. The interplay of monetary policy such as interest rate adjustments will also affect economic dynamics, impacting sectors differently. 3. Technological innovations and sustainability in agriculture. The agricultural sector is at a critical juncture, responding to climate change and rising costs with innovative solutions. Advances in precision agriculture, climate-resilient crops, and the adoption of sustainable practices are essential for enhancing productivity and sustainability. The increasing demand for locally sourced high-quality food reflects shifting consumer preferences, urging the industry to innovate continuously. Policies promoting sustainability are expected to drive investment in this sector, contributing to the broader economic realignment. 4. Competitive dynamics and geopolitical factors. Heightened geopolitical tensions, particularly from conflicts like those in Ukraine and Israel, have led to increased defense spending and shifts in global trade dynamics. This has significant implications for competitive dynamics within the defense sector and beyond as countries prioritize national security and adapt to new geopolitical realities. The resulting economic strategies will necessitate a reassessment of global trade relationships, investment flows, and economic policy frameworks influencing the competitive landscape across various sectors. These points provide a comprehensive framework for analyzing the projected shifts in investment patterns and their implications for the global economy as we approach 2025. 1. The shift in investment patterns post-World War II 1945–1960s. After World War II, there was a significant realignment in global investment patterns, particularly in the United States and Europe. The Marshall Plan facilitated massive investments in rebuilding European economies, leading to the expansion of infrastructure and industrial capacities. This investment pattern was characterized by a shift towards technology and manufacturing as countries aimed to modernize their economies and recover from the war. The U.S. also saw a surge in defense spending during the Cold War, which spurred technological advancements and innovations in various sectors, including aerospace and electronics. This period marked a considerable increase in government involvement in the economy and laid the groundwork for the economic boom of the 1950s and 1960s. 2. The dot-com bubble, late 1990s to early 2000s. The late 1990s witnessed a dramatic shift in investment towards technology, particularly in the internet sector. Fueled by optimism about the potential of the internet and digital technologies, venture capital flooded into tech startups, leading to skyrocketing stock prices in companies such as Amazon and eBay. This investment boom was characterized by speculative behavior and a focus on growth rather than profitability. However, the bubble burst in 2000, resulting in significant losses for investors and a re-evaluation of investment strategies in technology. The aftermath led to a more cautious approach to technology investments, emphasizing sustainable growth and solid business models. 3. The financial crisis of 2008 and its aftermath, 2008 to 2015. The 2008 financial crisis prompted a substantial shift in global investment patterns, particularly in the financial and real estate sectors. The crisis was fueled by excessive risk-taking in mortgage-backed securities and a housing bubble. In its wake, governments around the world implemented significant monetary and fiscal policies to stabilize their economies, leading to a shift in investment towards safer assets in sectors such as healthcare, consumer staples, and technology. This period also saw a rise in regulatory scrutiny and reforms aimed at preventing a similar crisis in the future, influencing investment strategies towards more sustainable and responsible practices. The recovery phase emphasized innovation and technological adaptation, particularly in fintech and green technologies, reshaping the investment landscape for years to come. The projected 30% shift in investment patterns across technology, defense, and agriculture sectors by Q4 2025 represents a significant evolution in the global economic landscape. This expected realignment is driven by several macroeconomic factors, including technological advancements, geopolitical tensions, and the pressing need for sustainable practices. Here are the key predictions and insights into how these sectors will transform by the end of 2025. Economic context and drivers. 1. Global economic recovery. The global economy has shown resilience post-pandemic with varied growth rates across regions. The U.S. economy is projected to maintain strong growth due to robust consumer spending and business investments, while Europe, particularly the eurozone, faces sluggish recovery. This divergence will influence investment flows and sectoral performance. 2. Inflation and interest rates. While inflationary pressures are stabilizing, they will continue to shape investment decisions. Central banks are expected to gradually adjust interest rates, impacting borrowing costs and capital investments across sectors. 3. Geopolitical tensions. Heightened geopolitical risks, especially in regions like Eastern Europe and the Middle East, are prompting nations to boost defense spending. This is likely to catalyze growth within the defense sector. Reshaping investment strategies globally. Sector-specific insights. Technology sector. Artificial intelligence (AI), and machine learning are projected to be at the forefront of technological investment. The sector is expected to contribute approximately $15.7 trillion to the global economy by 2030. Companies that innovate in AI applications across various industries, including healthcare and finance, will likely attract significant investment. Cybersecurity. As digital threats increase, investment in cybersecurity solutions is anticipated to rise sharply, fueled by regulatory requirements and the need for businesses to protect sensitive data. Spending in this sector is expected to exceed $200 billion by 2025, reflecting a growing demand for robust security measures. Clean technology. Investments in clean energy technologies will continue to surge, driven by global commitments to reduce carbon emissions. The transition to renewable energy sources and advancements in energy storage solutions will be crucial as governments implement policies to mitigate climate change. Defense sector. Increased defense budgets. Countries are expected to increase their defense budgets substantially due to ongoing geopolitical tensions. This will lead to a restructuring of investment priorities with an emphasis on advanced military technologies and defense infrastructure. Emerging technologies in defense. The integration of AI, drones, and cybersecurity within defense systems will become a focal point, leading to partnerships between tech firms and defense contractors. Investment in these areas will likely result in new innovations and higher operational efficiencies. Agriculture sector. Sustainable practices. The agricultural sector will increasingly pivot towards sustainability, driven by climate change challenges and consumer demand for transparency in food production. Technologies such as precision agriculture and climate-resilient crops will gain traction, optimizing resource usage and enhancing yields. Technological advancements. Automation in farming, including the adoption of robotics and AI for crop management, is expected to revolutionize agricultural practices. These innovations will help mitigate labor shortages and improve productivity. Regulatory impact. Policies supporting sustainable farming practices will lead to increased investments in technologies that promote environmental stewardship. This includes investments in bioengineering, sustainable fertilizers, and efficient irrigation systems. Investment predictions. 1. Shift in capital allocation. By Q4 2025, approximately 30% of capital is expected to shift towards technology, defense, and agriculture sectors. This shift will be influenced by both market dynamics and regulatory frameworks that prioritize sustainability and innovation. 2. Emerging market opportunities. Emerging markets are likely to attract investment in these sectors, particularly in technology and agriculture, as they capitalize on their growing middle-class populations and demand for advanced solutions. 3. Cross-sector collaboration. There will be an increasing trend towards collaboration across sectors, especially between technology and agriculture. This will manifest in partnerships that leverage technology to enhance agricultural productivity and sustainability. Conclusion. The anticipated investment shift by Q4 2025 underscores a broader trend towards innovation, sustainability, and strategic realignment in response to global challenges. Stakeholders, including businesses and investors, must remain agile and informed to navigate this evolving landscape. Monitoring sector-specific developments and adapting investment strategies accordingly will be crucial to capitalizing on the opportunities presented by these transformative shifts. As the world moves towards a more interconnected and technology-driven future, those who embrace change and invest wisely in these key sectors will be well positioned for success.